Hello everyone, welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForestHodl, and in today's video I'm going to go over Michael Saylor's digital asset framework that he presented the other day to the head of the House Financial Services Committee, whose name is French Hill. And he's also going to the Digital Asset Summit, which is happening on the day that I release this video. And I'm assuming there's going to be talks within there. There's going to be talking to different people that he's already presented this to. And this will be something that we'll see. Maybe some of these ideas will be presented at this summit. Maybe some of these ideas will be implemented and talked about by other officials. And we'll see if any of this goes forward. Essentially, though, this digital assets framework is largely the issues that the government needs to figure out when it comes to cryptocurrency at large. And of course, there's some specific part that relates specifically to Bitcoin within here. So I'm going to read this out and add my own commentary throughout, but there's 5 key points that need to be looked at for regulation around this industry. Now, we can all agree or disagree on if regulation needs to happen, but in my opinion, we are going towards more regulatory clarity when it comes to cryptocurrency, and we are coming from a space of not as much KYC, not as much regulation, not as much AML, all of this stuff. So I can just see where the trend is going, regardless of whether I agree or disagree. And what I do agree on is that the trend is going towards more regulation. And within that regulation, I hope that there are intelligent, smart people making those decisions and being advised by intelligent people as well, who I believe Saylor is one. So here we go. This says here, digital assets framework principles and opportunity for the United States. Number 1, taxonomy, defining digital asset classes. Establishing a clear, universally understood taxonomy of digital assets is critical to advancing policy and fostering innovation. 1. Digital commodity is an asset without an issuer backed by digital power. Example, Bitcoin. Digital security, an asset with an issuer backed by a security. Example, equity, debt, derivatives. Digital currency, an asset with an issuer backed by fiat currency. This would be a stablecoin. Digital token, a fungible asset with an issuer offering digital utility. Digital NFT, a non-fungible asset with an issuer offering digital utility, non-fungible token. Digital ABT, an asset with an issuer backed by a physical asset. Example, gold, oil, agricultural commodities. So what is being spoken about here is deciding where each cryptocurrency or each type of cryptocurrency will fall into one of these definitions, and how do each one of these get taxed, or what is basically the tax laws and other regulations that go around it based on these definitions. That's the idea here. Number 2, legitimacy, establishing rights and responsibilities. Creating a robust framework of rights and responsibilities is essential for issuers, exchanges, and owners to engage in digital asset markets with confidence. So this is bringing some awareness of what your responsibilities are as an individual that owns crypto, and what it could be for somebody who's an issuer of a token or something like that, and then what the exchange's responsibilities are. So these are all the key players in the world of Bitcoin and cryptocurrency. So path to legitimacy, establish a global, real-time, and uninterrupted process for issuing, trading, and owning digital assets by individuals, corporations, and machines. Issuers. Rights. The right to create and issue digital assets. Responsibilities. Ensure fair disclosure and ethical behavior. So who has the right to this? When they do have the right, what are the fair and ethical behaviors that they should abide by as an issuer? And if they breach this, what is the consequence to that? These are all things that need to be defined, right? Exchanges, rights, the right to custody, trade, and transfer assets between clients and other exchanges. Responsibilities: publish asset disclosures, protect client assets, and avoid conflicts of interest. So these are some things that exchanges might need to do, some things that they do already or could be doing if they are an exchange. I think it's very interesting that publish asset disclosures is on here, as we can see that there was a lot of paper Bitcoin with FTX. MSTR isn't an exchange, but they don't publish their asset disclosure necessarily, like not the proof of the actual coins. They just say they have that, and it's up to us to trust, right? When really we should be verifying. Not something I love about MSTR and strategy is that there are, even Metaplanet shows their public wallet address, which I would prefer for strategy for sure. That would alleviate a lot of wondering. Anyway, owners' rights, self-custody, trade and transfer their assets. Responsibilities: comply with applicable local laws. So do the owners have the rights to the things that they need to have to be an owner of crypto? Foundational principle here: no one has the right to lie, cheat, or steal. All participants are civilly and criminally responsible for their actions. Okay, so that's all pretty clear, pretty simple, pretty easy. We're going on to number 3 here, which is practicality: rational compliance to empower innovation. Digital asset regulation must prioritize efficiency and innovation over friction and bureaucracy. Standardized disclosures: define a data structure for each digital asset class to constitute fair public disclosure. Industry-led compliance: allow exchanges to collect and publish asset data as a service to the industry and investors. Cost limits: issuance compliance: limit costs to no more than 1% of assets under management to issue an asset. Maintenance compliance: limit costs to no more than 10 basis points annually to maintain an asset listing. Streamlined issuance: remove regulators from the critical path of digital assets issuance. Empower exchanges to deliver integrated services to issuers, owners, and other exchanges. Goal: enable exponential improvements in cost, speed, quality, and accessibility via free market competition and innovation. So there are some guidelines of what Saylor would suggest that limit costs to no more than 1% over of assets under management for an issuer of one of these assets. So basically what he's talking about is, if under these frameworks and with government oversight in the crypto industry, which largely they have ignored, with the insights of this, there would be issuers that would be allowed to issue some sort of new token or something connected to the real world or something like this. And the taxes or the fees that would go to the government agency overlooking this would be no more than 1% of the assets under management of the tokens that they would release. And then there'd be a maintenance compliance on top of that, which would be no more than 10 basis points or 0.1% annually. So I don't know. This is interesting. Of course, these are just guidelines, right? This is a framework. This isn't something that necessarily anybody is going to adopt, that the government of the US isn't necessarily going to adopt this. This is just what is recommended by Saylor and his team who put this together. So number 4, we have vision: a capital markets renaissance. The United States has an opportunity to catalyze a 21st century capital markets renaissance, unleashing trillions of dollars in value creation. Rapid issuance: allow issuers to create and issue digital assets in hours or days instead of months or years. Cost reduction: drive the cost of issuance from 10 to 100 million to 10 to 100,000. Access expansion: open capital markets to 40 million businesses, up from the current 40,000 public companies. Broader participation: empower small businesses, artists, celebrities, and mid-sized enterprises to raise capital through tokenized assets. This is all getting very interesting, right? So this is digital assets framework, right? This is coming from somebody who a lot of us can believe or have the perception of a Bitcoin maximalist because all he buys is Bitcoin, right? He's not throwing ADA onto his balance sheet. luckily. I mean, I think he would have a lot less investors if he was. So in his positioning, he's a Bitcoin maximalist, but he understands that the crypto industry exists, and he is trying to find a place for that within this framework, which is what the current administration is wanting to do. They're not wanting to say, okay, all of this is banned, all of this is vaporware, they're not, you know, I'm not running the place. I'm not going to say, like, if I was, I would say all of this is vaporware, you know, whatever. But what he's trying to do is toe the line between free markets and adequate regulation. So it's an interesting place to be. It's an interesting conversation to have. And we can see that it's not necessarily pro crypto to say all of this stuff. It's even not necessarily pro regulation. It is just saying that these are all things that need to be thought of when looking at the digital asset world currently. Investor opportunities enable access to thousands of digital assets, including tokenized commodities, real estate, art, businesses, teams, collectibles, IP, and brands. Financial instruments like equity, debt, derivatives, and currencies. Products, services, and projects that provide value to customers, investors, and fans. A lot of what this fourth one here is changing the way the capital markets are structured, allowing a lot more basically equity type instruments to be created that might be tracked on some sort of semi-decentralized ledger through tokenization, and basically creating new investments for people and making it easier to, in a sense, find a public market for your company, your art, your business, right? Creating more investment opportunities. And this, I mean, potentially, I mean, there's going to be ramifications, right? So, you know, how well will this be done? There's kind of a reason why there's, you know, there's certain metrics, certain benchmarks that need to be hit before certain assets are listed on public markets, or depending on what exchange they'll even get on, which elevates their exposure to the public. And this is all in the guise of protecting the public. So by changing that, by allowing a lot more tokenization of assets and, you know, creation of these kind of digital assets, that could be broadening who could be exposed to these, and that could either be a good or bad thing, depending on how a lot of that pans out. Number 5 here in the last one, we have opportunity, establishing the United States as the global digital leader. A strategic digital asset policy can strengthen the US dollar, neutralize the national debt, and position America as the global leader in the 21st century digital economy. USD as the global reserve digital currency. Grow digital currency markets from 25 billion to 10 trillion, creating massive demand for US treasuries. This is something, there's a reason this is at the top of this point here. It's because this is something that the crypto committee has already wanted to do. I think, of course, they want to create more demand for the depreciating US dollar and export the toxic sludge of their debt around the world to as many people and nations and businesses and everything as they can, because it allows them to kick the can down the road and continue with the fiat destruction that they are creating. Digital capital growth. Expand global digital capital markets from $2 trillion to $280 trillion, with US investors capturing the majority of this wealth. Now, where are these numbers coming from? I have no idea. How would they expand it to 200 trillion from 2 trillion? That's a massive amount. I mean, is this anywhere realistic? What are the projections of that? I mean, maybe it's accurate that the global digital capital markets is 2 trillion. I'm not sure. I have no idea how this would lead to 280 trillion. I mean, I guess just by the additional creation of tokenized assets. That seems like a huge number though. Digital assets leadership. drive growth in digital assets beyond Bitcoin from 1 trillion to 590 trillion, with the United States dominating this industry. This is all worded in a way of being very pro-America, very pro-US. This is geared towards showing that the US could be at the forefront of a lot of money creation, of a lot of value creation, and being, at the front of this new digital global economy that is forming with Bitcoin, and specifically in this side here, crypto, right? If we talk about, right, so the crypto industry right now outside of Bitcoin is only worth $1 trillion when they made this. And he's saying that it could get up to 590 trillion. Now, within what time frame? Because of what? Because of this framework? I mean, I sure hope that I just think that a lot of it is nothing. A lot of crypto is nothing burgers, and Bitcoin is the true innovation in the space. So I have a hard time believing that there is $590 trillion worth of value to be created in the crypto economy outside of Bitcoin. Strategic Bitcoin Reserve. Establish a Bitcoin reserve capable of creating $16 to $81 trillion in wealth for the US Treasury, providing a pathway to offset national debt. So this is to offset national debt. This isn't, they didn't say pay off national debt. They said to offset. So this would go against the debt, either just on a balance sheet or potentially being sold to pay off part of the debt. So that's the idea there of the strategic Bitcoin reserve. Conclusion: seizing the digital assets opportunity. By establishing a clear taxonomy, a legitimate rights-based framework, and a practical compliance obligations, the United States can lead the global digital economy. A capital markets renaissance fueled by digital assets will unlock trillions in wealth, empower millions of businesses, and solidify the US dollar as the foundation of the 21st century digital financial system. Now, this all sounds very great from to the political figures, I think, that he is talking to. I think that this would be very attractive. They would go over this line by line, bullet by bullet here. This is what he did with French Hill, I'm assuming. He's probably brought this to other people in private closed-door meetings where he wasn't even able to publish this. Maybe they'll be talking with people on Friday at the Crypto Summit, Digital Asset Summit. How much of this is good? How much of this has some, mixed bag, gray area in it? It just is what it is here. We do not have a Bitcoin president sitting in the United States. We have a crypto president. So that is what it is. It shows the state of things here. It shows that, he's in a shitcoin phase. He pumped his own meme coin, right? And, there's a place here in this digital asset framework for meme coins, right? There's a digital token, right? I think that very few representatives would see this and really be turned off by it. They would say, okay, well, maybe we could bolster American business by being on the forefront of this. And I think overall it's an interesting thing to go through. It's an interesting thing to know what's on the table of these key decision makers. Now, the person that was presented this, French Hill, he's got no authority to make any of this law, right? It still has to be created into a bill, go through Congress, Senate, whatever have you, eventually land up on the president's desk and be signed into law. So there's a lot of stages where something like this could get shut down. And I think what would happen really is this is an informational packet that the crypto czar, maybe David Sachs even, and maybe some other key people within the administration would take maybe some of this information and elaborate onto it, create their own idea of what some digital asset framework would look like, and use this maybe like a model portfolio or like a template, and just change around things to probably benefit themselves and the people around them more than anything else, as that's what politicians typically do. So yeah, I think this is good to know, though. I think it's good to have gone through this and to realize what's happening, and then we will not necessarily be surprised by some of the changes that I think will be happening for digital assets in America. Thanks everybody for watching. I hope you enjoyed this video. If you have any questions, comments, YouTube is the place for that, and we'll see you on the next episode of Bitcoin Not Crypto.